on. Recording initializing. Okay. All right. Good morning, everybody. This is the Friday morning, we'll call this the live trading session recap. We're going to look at NASDAQ here. This is the NQ contract, $5 a tick. And this is trading one shot with the standard settings. One shot by default is an auto trader that takes one contract. You can trade more, but that's actually the behind the name, hence the name one shot, only taking one contract. So what I wanted to show here is at 6 o'clock, if you fired this up, the market was already short, so it didn't take a trade over here. However, you see that it did take a trade here. By the way, just a quick pop quiz for those of you that are one-shot aficionados. Can anybody say what kind of trade it took there? What kind of trade did one shot take right there? Anybody know? There's only two. You got the choice of two by default. It only takes two types of trades. Anybody know? Well, it took a short. That's right. It's one contract shorted 0450. Anybody know what type of trade? What type of trade? You can't see the chart, Lily? That's a probie. That's right. See, what was happening here is it was watching here for a probe trade setup. One shot was. And it went ahead and took it, but you can see here that actually the market flipped and you took a full stop out. Now the thing that's nice about NASDAQ with a 15-tick initial stop and trading only one contract is you only got bit for about 75 bucks here, okay? And you know, we talk about risk tolerance, and you know, if you're comfortable, you know, letting this thing take a hit or two and being down 100 bucks, then you know you can watch this trader and let it go ahead and take these trades. Yeah, exactly, One Chief, exactly. I was just going to point that out. Well, you can see right here that shortly after it stopped out, it flipped and took the long trade right here. Stopped out of that short for the loss, right? And then it catches this beautiful long trade breakout here. Does everybody remember right around the open? Here's the open of the market, 6:30 Pacific, was right here. Remember we watched the market bottom out? Remember? Have been running down all night. I think the Dow futures were down, I don't know, 180s plus near the open. They were just tanking that thing all night, right? Bottomed out. And then I have to tell you, I was surprised. I didn't think they were going to run it all the way up like this. So here's your equity curve. Now what I want to show is something here. And we talk about big green and profit goals and daily profit goals and things like this. So by the apex of this long trade, and this is just one contract, you come up through the break-even line and you get up here about 350 bucks. How many of you would have this would be your big green for the day? Anybody in the room here? 350 bucks, plus or minus a couple of ticks. Would this be it? This one trade? We call that one and done. You went from down about 100 bucks, plus or minus a few bucks down here. You come up through the break-even point, and she just rides that baby all the way up, and actually hits a full 80-tick profit target on the first trade, right out of the gate, right out of the day. Boom. Yeah, I mean, you know, if your profit goal for the day was 400, if it was 3 1/4, whatever, you know, plus or minus 10%, 350, you hit the mark. We call that one and done. Now, what you want to do, and we show this in the pro webinars, is a lot of times in some of these fast-moving, volatile markets, is you can hit 80-tick targets. Now, here's the problem with that. Can everybody see what it did right after it hit that target? Look at what it did. What did it do? What did it try to do right there? Right. Jump right back in on a probie, didn't it? See it? See it jump right back in on a probe trade, thinking that the market was going to go back up. You were actually in the green for a little bit here. See how it didn't take out the swing and continue up? So, in fact, you could make the case this was a legitimate probe trade, yes? However, you just didn't get any follow-through to the upside. What I'm trying to say is two things. First of all, you can see what happens to your equity curve. It immediately draws it back down. Okay. After you get those nice long runs, we can anticipate consolidation and in some cases a reversal. Right? And you know, the way to avoid that is you have to push your targets out to what I suggest 120 to 140 ticks. It's pretty rare that it would hit that, and in all likelihood on an instrument you're trading, if it hits 140 tick profit target, you probably want to close it and bank the coin, right? That makes sense? Anyway, so let's see what happens here. Let's continue on. Let's suppose that you didn't bank the big green here at 350. You let it continue to go. So let's see what happens. Come down here, it flips, take a little short trade. Your equity climbs back up. By the way, this is the roller coaster you see on these auto traders sometimes. You know, you get up and then it draws it down and then you draw back up. You get another chance to get out of up near 450 here at the apex of your short. See it? You could have let it take that one pop hit, flip, catch the short, and you got another chance to get out here. Yes? 450? See it? All right, on we go. Gets a little chopped up here trying to find its groove, and then boom, we catch another beautiful long trade here. Now the apex of this one, if you let that baby continue to ride and you didn't get out over here, you could have rode that all the way up to near the 600 mark here. Now, I'm going to ask this again. By this point here at 705, if you were up 600 bucks, plus or minus, how many of you would have stopped here at the apex of that long trade? You didn't even have to let it come all the way back to here. You could have just simply hit close position, bank your 600 bucks at 705 Pacific, and you are done. That is it. You don't need to let it keep going. What do you think is going to happen after that big run? Anybody? We get this huge monster run, and one shot just rode it up perfectly. What do we think is going to happen next? Any guesses? What do we think is going to happen after that? Nice, caught this run, caught this, got a little chopped up, caught that run. What's going to probably happen? Chippy chopperoo, that's right. Think the equity curve is going to keep going straight up from here or down? Well, I would bet this way. Wouldn't you? You see how it roller coasters? See it? See it roller coastering like that? That's what it does. All right, let's go on and see what happens as you let it continue to run. Uh-oh. We get a little chippy chopperoo. Get spanked down a little bit here, back all the way to 370. So almost half your profit got chunked right there, right? All right, so let's see. We let it continue to trade, gets beat up a little bit more, starts to try to claw its way back with another long trade. Stayed in, almost got stopped out right here. Almost got it. Missed it by like a tick or two right in there. Rode it up, rode it up. By the way, I just want to show something here real quick. And I think we were calling this out. I can't recall what instrument we were tracking, but on the equities, if you're watching one shot in a trade and you see yellow bar probe trade setups, this is the beauty of having one shot running on a screen, whether you're running it live or not. Just the simple fact of seeing what trade it's in and where the trailing stops are is a tremendous asset and tool for most of the traders. We have a lot of traders just take this trader, put it on an instrument like NASDAQ, stick it over on the left-hand screen, and just watch what it does, okay? And when you break out of these consolidation patches, you take long trades, right? You watch what it's doing. You don't have to take all the trades it takes. You watch for a breakout to the upside, you take it. You watch for a yellow bar probe trade, you take it. It's like having a little automated trading buddy sitting right next to you. You're watching what it's doing. You're watching where its stops are. Just a little tip there. I mean, you don't even have to use it live. Just simply watching it trade is an educational benefit in and of itself. Anyway, so here we get another chance to get out. After catching this nice long trade, our equity curve goes all the way back up here to 650. You climbed your way up from 300 back to 650. Here's another chance to get out, yes? So in a nice roller coaster day, you get, you know, in this case here, I think you've had 1, 2, 3, 4 shots to get out and bank at least $500-600 bucks. All right? You could have, yeah, Luke, I think, asking a question here, could we have avoided it taking the hits on the short side? Absolutely. You know, if you're looking at a 10, I don't have a 10 here right here in front of me, but it was pretty much blue most of the day. In fact, all this way up, it was blue. The way you avoid it taking those shorts, Luke, on the runs up is you simply toggle off the short side. In this scenario here, it would only take long trades. Yeah, it would only take long trades. You could put 2 contracts on. You know, it's not designed to have a 10-tick fixed target and then a runner. By default, it just has the runner. But absolutely, you could put 2 on if your risk tolerance is such that you can handle 2 contracts. Absolutely. Toggle that back on. All right. All right, so let's suppose we don't get out here. Let's see what happens after 7:30 here. We start to chop around. It catches a little short. Starts to climb back up. Here you're up $800 right here. Takes a couple of hits, drops back down to under 600. Start to get really chopped up. Now, I think over here is where we started to watch for a break. and we called out a short right here, live in the room, that we actually took. Remember, we said as long as it's in this choppy town USA, we're going to watch for a break of 90, which it never did. Remember, and we had a similar level we called on EMD. Remember, and we said we're going to watch for a break of, I forget what it was. I think it was 0450 or something. And sure enough, it broke. This was the one we called live in the room, right here. Remember, and we trailed the stop down. Well, you can see one shot got filled at 81.50. We called a level about 4, 5, 6 ticks higher than that. So we were already in by the time one shot got filled here. See it? Okay? All right, so we trailed the stop, trailed the stop, trailed the stop. We were actually stopped out here because our stops are a little tighter than one shot. This is called a drawdown at the end of the trade. We actually got stopped out. Remember, we were calling the stop. I want to say it was like 9.5, 9.25. It was just a couple ticks under 70 is where we got taken out of this trade. So we got filled here at 450, and we got taken out here. That was our trade. Notice that one shot leaves quite a bit more wiggle room in its trades. Notice that it let retrace all the way back here to 75.50 and 3/4. You didn't have to let it do that, by the way. You can simply use a dome or a chart trader. If you feel that at the end of a nice run, like this short trade here, you simply take the stop on your chart or dome and you drag it down into here, and it would take it out. Okay? You don't have to let it retrace. See the drawdown you have here? You went from up 800 at the apex of the trade. By the time it fully stopped out, it was back down at 650. See the drawdown at the end of the trade here? What I'm saying is you don't have to let it do that. This is the drawdown here. It's about 200 bucks. By the time it retraced all the way here, it was almost 200 bucks it gave up. See it? See the drawdown on your equity curve? All right, so let's just see if you let it run after about 8:15. Did it go take another trade? Here was our chop. Yeah, a little consolidation. Did not take a long trade in the middle of here. See, it did not get long. Simply waited for a break, and then I think that was it. Yeah, that was it. That's the last trade it took. So anyway, you can use the crank. Good question, Orland. Is there a crank stop in here, Rich? I don't use that feature too much.
Yeah.
So.
Yeah, there's a crank stop. We have a crank stop in there. Crank it down.
Crank it down, baby. So that's what we were talking about was using the crank stop feature to more or less lock this down from your stop here down into this area here, kind of right at the end of the trade. We were calling out that level, and it popped right through it. So this one shot, I'm telling you, it's part of the deluxe package, the sort of mid-range package that we have, which you get everything in the one shot, and we got a lot of traders that just love this little tool. Let it run all the time and just watch it. I wouldn't run it all day. I would say right around the open of the market, high energy time, and news events. That's when you want to let this baby run. And then if you're not comfortable letting it take trades on its own, simply watch it fire, see what it's doing, and then cherry pick the spots you want to get in and out. That's the way you can use that. Imad, yes, this is all Pacific time. I'm here in California, so it's what time is it now? 8:43. Yeah, so this is all Pacific time down here. So when you get situations like this, here's what Nasdaq's doing now. Let's see if it's going to break to the upside. So let me ask you this question: after about 8:15 Pacific, is Nasdaq trending or not trending right now? Anybody? From about right here, after we stopped out of that short trade, are we trending or not trending right now on NASI? What do we think? No, absolutely not. We've got pretty strong support kind of sitting down here at this, call it 66 level, plus or minus a tick or two down here. We've got pretty strong resistance up at 76. Now it's trying to break to the upside here. You might have popped along here. I didn't obviously get into it, but it's trying to break this resistance level to the upside. And if you take these breakouts, what you want to do is look for logical next places it could go, particularly if you take two contracts. You see we have a little swing up here it could go up and hit, like such. And if it blasts through there, of course, you could get all the way back up to this 88, 90 area resistance level. If you take 2 contracts, we like to get a little 10-tick pop-a-roo like you just got. And then we talk about trailing the stop on the rest. So your stop would be right around your entry right now. See it? So you get your pop. Say you got filled at 76 and a quarter, plus or minus right in here. Went up and hit 80. What is that? 4 times 16? About 14, 15 ticks, something like that, on this initial pop. If you can handle 2 contracts, that's the way to do it. Really, we talk about that in the room. You hear that little cowbell sound? Ding ding, bank a little coin. This is what we're talking about. The initial pop out of the box. Tighten up your stop, and now you have a free trade. Yeah, Orland, I see where this would have chopped you up a little bit inside of this box here. Yeah, you know, once what I like to do, and this is why we call these levels out in the room, is just real quick. Here you have a swing level that was put in here, yes? And here we have a swing level a few minutes later that was put in here. See it? Right up here. And then what I tend to do is then I put lines in and I watch these levels now for a break. It was either going to go this way. Here, let's blow this up a little bit better so you can see it. Yeah, break either way. Right. Either way. Because inside the box, we don't know. I mean, when it's chopping in the middle here, you don't know which way it's going to go, right? It could resolve itself this way. It could resolve itself this way. So we're patiently looking for a break out of the box either way. All right, so that's that. Any final questions on what we showed here? How to trade one shot. You could do it, let it trade itself. You could watch it, pick your own trades on another tool like Line Trader or the Dome. We talk about staying out of choppy consolidation after you get nice moves. We took this short, banked some coin. No need to chase it around. You're nicely green. We're going to turn off the machine. You could have possibly got a quick pop here with a stop sitting pretty close to break even, a couple ticks behind your entry. And you're done for the weekend. Good way to wrap the weekend. It's always good to go into a Friday afternoon and Saturday and Sunday with a good winning week and a strong Friday. You always feel supercharged for Monday and excited about next week. Any final questions before we wrap? We did record this little recap, so